Here is a free guide for anyone that is interested in understanding and learning how I personally trade futures. I'm going to go over the quick strategy, just run through it right quick. But you can use this as a tool. We watched the video a few times, but I am here to tell you, take a pen and pad right now. Find something right now to start taking notes on, because I'm going to basically explain my thought process of how I go about finding trade setups, executing in areas or zones, especially I trade supply and demand. High quality setups, okay? That's what we're talking about. What does that consist of? That consists of, number one, being able to read the flow of the market, paying close attention to market structure and price action activity. Also, what that will help me do in turn, number two, is find quality zones using a higher base chart and then moving down. Let me say that again, because that's probably the most important piece. I trade using multi-chart Confluence when it comes to the futures. It doesn't matter if it's the E-mini indices or micros, if it's any means of a currency market, a commodity, whatever it is, okay? Because the strategy doesn't change. It's all the same. Looking at and starting with the higher base chart first to figure out the overall direction, right? I'll say it again, the overall direction. And then marking up your first zone off of the higher base chart. The second chart, which I move down to once the market has pulled back to a key zone, that's when I'm moving down to a lower base chart, or it could be a lower time frame chart if you trade, the minute base charts like 60 minutes, 15 minutes, 5 minutes, whatever it may be. Maybe you trade tick or volume charts. Whatever works best for you and you're able to read the market, meaning the flow of it, clearly use those charts. For me, I trade based on range-based charts. Again, this is a free guide that I'm providing you, so take notes. Let's get started and jump into it. First and foremost, you want to be able to look market structure, okay? What have we been doing? If we're bullish, then just be looking for bullish setups at key areas of demand. Demand means aggressive buying areas to where we can jump into the market and take an entry going long. Okay, now we can see the market is bullish. It has been for the last few days, making higher highs, higher lows, breaking structure to the upside. If we are doing the opposite of and breaking structure lower on a higher base chart or higher time frame chart or tick or volume chart, then we should only be looking for opportunities to go short. Okay, yes, we are going to have pullbacks, but we need to understand, structure and understanding the flow of the market, okay? Because yes, the market can give us a pullback to where it starts making lower lows and lower highs, and yes, when it does that and it's starting to break structure in the opposite direction, then we're going to be looking for it to go short. But when the market starts back up and starts breaking structure back to the upside and it's taking out major highs, in this case here, we're only still looking for long positions. All right, so we're going to take a look at today's trading or price action, okay? And just kind of, because not a lot took place today if we're looking at my higher base 120 range chart, but, okay, when it comes to trading the E-mini futures, all right, and I trade the NASDAQ, the ES, I like trading gold as well, but primarily I'm posting over on our Discord community. And yes, if you're interested in joining the Discord, the link is down in the description portion of the video, just as well as the link to become an elite member to the private community, which is very inexpensive for anyone that's interested of watching and, the trade breakdowns. The trade breakdowns is where really the whole, the gravy and rice come together at, the whole substance to how I actually trade. Because I'm walking you through these setups, the same setups that I post over on our Discord community. I'm walking you through these trades so you grasp an understanding how to use the strategy correctly, but how I use the strategy and what I was looking at, target profit areas, stop loss areas, structure. There's tons of those type videos on there. I mean, lots and lots and lots of them. So if you're interested in becoming an elite member, the link is down in the description portion of the video. It's only $6.99 a month, okay? And this could be game-changing, life-changing for anyone that's really wanting to learn how to trade futures. Now, jumping back into what I was talking about, the market is making structural breaks to the upside. Keep that in note. Number one, as long as we are breaking structure to the upside, taking out major high swings, then we're only looking for opportunities to demand zones, okay? So, for example, you see this high probability area right here. This is a structure break to the upside. We're making higher highs and higher lows. I'm only looking to go long. So on my higher base chart, okay, it could be a higher time frame chart for you, whatever it is. I'm marking up my first zone on the higher chart. All right, mark it up. Okay, and then I want price to come back to it. Now, there's a difference of low quality and high probability setups. High probability is where there is a imbalance or a gap at the zone. Okay, something that the market has left behind. Okay, and then a low probability setup or quality setup is going to be where there's no gap at. I'm only interested in taking trades where there's a gap resting at the zone. This is a high probability zone right here. Now, once I do that, I want to move down to my lower base chart to see if there are any zones that I can trade from and mark up on my lower base 24 range chart. This is my entry chart. Mark the higher base 120 first. Then I'm looking at my 24 range to see if I can possibly find a setup. Now, when the market comes back to this zone, I don't see a actual high. Well, there's a high probability setup right here. Okay, right here. But the market broke right below that area right there. So it makes that zone invalid. So I just passed up on that say, for example, that setup right there. Now I'm looking above me and, there's some areas where the market can feel right here on the way back up. And that's what it does do. Okay, so I just miss it because for me, it wasn't quality enough for me to want to get into that trade. Even though we're tapping off of a higher base zone right here, okay, off the higher chart, I just stayed out of the trade because it didn't give me what I'm looking for. Now, the next opportunity comes up or lies when market broke structure above this area right here. So it comes up, pulls back, and then it breaks structure back up to the upside again. Why? It breaks above this area right here. Okay, so there's a demand area right here coming off of this structure break to the upside. So it breaks above, pulls back, breaks higher, and then it pulls back to this key area of demand on this wick of this candle, this bullish candle here. You see the break right here, and then the next candle that starts to form and break to the upside, the wick of it came back and it tapped that zone there. So it's roughly around about 11 o'clock. That's Eastern time. That's my time. So let me do this right quick. I'm gonna draw the zone. Okay, the camera is getting in my way. Okay, let me figure something out here, guys. Forgive me for that. All right, so here we go. Let's move down to the lower. Sorry, let's mark the zone up first. That's what I was trying to do. All right, here's the zone right here. Okay, all right, and we move down to the lower base chart, and you'll see it here. Put it on all charts. You'll see it here on the 24 range chart, my entry chart. This is where it comes back and taps the zone. Now, there was a high probability zone on the inside of this higher base zone. See this lower base, okay, 24 range demand zone. If I said supply, I meant demand, guys. Broke structure here, came back. The larger zone, the bigger box, is the 120 range zone that I marked up right here. But it didn't come back and tap into a lower base demand zone on the 24 range chart. So that didn't happen, okay? But it did eventually come back to it. You can see it reacted off when it came right back to the 120 range zone. It reacted and pushed up. Primarily, why did it do that and why did it push up? Well, there's liquidity resting above and it went up and took out those areas. It did come back, though. It did come back, okay? And we see on the 24 range chart, it started pushing lower. It finally tapped the zone right here, this long rectangular zone right here. This would be the 24 range zone that's marked up on the inside of the 120 range zone, if that makes sense, okay? So we're looking for confluence with a zone within a zone. If we get it, then we're looking for the opportunity to go long. But this was still a valid long opportunity, even after the fact the market tapped the higher base zone right here, and there wasn't any confluence on the inside of a lower base zone on the 24 range chart. Now, maybe I wouldn't even say that. Probably, I was going to say scale down to maybe even a lower base chart. You probably see something, but I traded 24 range, and there wasn't anything. You can see where it tapped right here, directly off the 120 range. Into the 120 range zone here, but there was nothing on the inside. So it pushed up, broke structure, came back on the 24 range, finally tapped into the high probability. Yes, it is high probability because there's like a couple ticks gap back at the 24 range zone right here, okay, demand zone. All right. And when it tapped the zone there, the reason why I was still interested in this, for one, we came back and we were still hitting on that prior area of tested demand on the 120 range. So, all right, there's still, possibility the market could reject that area is what I'm trying to say, okay? And then when I look to the right, if I'm using the volume profile, for example, we're down in this low volume area here. The market likes to react out of low volume areas just as well. I'm going to put that back up there. So I already had the zone marked up. I had posted this over on the Discord earlier. Now, when I move over to that area, look where we're at. We're in a lower volume area here on the volume profile. The volume profile I like to use, I don't take my trades directly just based off of it. I use it as a means of Confluence as well. But Confluence is where everything kind of comes together. The more that you have stacked up and working in your favor, I got a high probability setup or zone right here where the market came back. It tapped into the 120 range demand zone. There's a solid untapped 24 range demand zone resting right here that hasn't been reacted off of yet. We're in a lower volume area here, okay, right here. If I was probably, let's see, to draw a range profile, do it like this, okay, you would see that we're at the bottom end of this high volume area right here, and I'm marking up where the zone rests at, the swing which the zone came out of right here, okay, to the upside. Mark up all that area there. We're in a low volume area right there. So I like to see that because that gives me more Confluence to let me know that there's a possibility the market's going to react here and probably want to test higher areas, moving back to where volume is that it likes to be around. Also, on top of that, I'm looking for other areas of Confluence, okay? Support. We're at areas of support. There's a support area here where the market broke up, bullish activity. We had, support right here and primarily right here as well, where the market pushed up, broke above these swings here. These swings are acting as support. This is support. And then we look to the far left. This is the area of support where the market pushed up, okay, and broke above this area here. These are kind of what you would like to call either support areas or reversal point areas. Okay, so this is what it all entails. The more Confluence I have on my side, the better that the recipe in full is going to work out, okay? When I start adding all the ingredients together. Again, this is off the NASDAQ E-mini futures. I'm trading this, looking at this. So the market came back, reacted off the zone. I'm looking to see what's above. Yep, I don't really see any gaps to the upside here unless we get up to here and maybe possibly up here. But this area up here is actually supply resting up here, but there was liquidity right here, and there's also liquidity at the tops up here, which it may come up there eventually and want to test and run that area. But this was a valid area to take off the rejection with all this area of Confluence adding up. Then let me show you this too. It reacted there. It starts to break structure back to the upside, okay, taking out minor areas of structure as it's moving higher, pushes up, pulls back, break structure here, taking out some smaller swings to the left side of the chart. It comes back. We tap back into that higher base zone. If I bring this out, this is that 120 range demand zone again. Okay. All right. Now, again, most times what I'm looking for is the first tap back to the 120 range chart and look to see if there is a 24 range zone resting on the inside. Okay, so when it came back right here for the first time, it just rejected the 120 range chart, zone, that demand zone, and went to the upside here. But it eventually came back down to a 24 range demand zone resting on the inside of that zone, again off the 120 that had already been tapped. Yes, at that point there, because it's already had been tapped once right here, it lowers the I guess the interest for me a little bit, but that doesn't mean that the market still can't react at zones. This is at this point a lower probability zone off the 120 range, but we're talking about still a 120 range zone in comparison to a 24-hour zone, okay? It still can carry a lot of weight. It can still react at these zones. It just is more sweet when I have an untested 120 zone and an untested 24 range zone where the market pulls back into. So if the market would have came down deeper on this first tap right here into this first test at this 120 range zone and came and hit it, like meaning right here, let me show you. This thing's getting on my nerves. Where it came and did this and tapped the zone, hit the 120 zone, hit the 24-hour zone, and then reacted off the first test at the 120 zone, it would have been more beautiful setup for me. So I just weighed my options when it came back to it. We're still hitting a higher base zone, and we have an untapped 24 range zone. I'm looking for rejection with all this area confluence, and we're in a low volume area here on the volume profile. Getting into a low volume area, like right here, low volume, a low volume node here. So that's kind of how the market moves in between valleys and peaks. Okay, so it reacted there. Then it came back down again, tested the 120 range demand zone again, and there's another setup off of the 24 range right here. Okay, another demand setup. This is a high probability 24 range demand setup. We're breaking structure back to the upside. It does come back. It's in between a major high and a major low right here. It reacts off of it, and there are gaps to be filled back to the upside. You can take your opportunity to go long, okay, off this demand setup. Now, so I'm showing you these things, in real time as far as, the market in today's session with the market price action, okay, in reference to market structure as well. This is a simple free guide that you can use if you trade the E-mini futures to help you out. But again, market structure, marking appropriate zones, understanding the flow of the market, and understanding breaks of structure when it comes to trying to find the direction of the market. Now, what's the market probably going to do now? Come up here and take this area of liquidity out, okay? All it did, it broke structure here, pushed down, made a low, lower high, broke structure lower, just to turn back around and pushed up, pulled back, made a high, higher low, breaking structure here, small break above here. So now it's bullish back to the upsides, taking out more structure right here. And let's see, it's actually taking out more structure as well right here above this high right here. You can see it, okay? Well, it wicked above it, but hasn't quite taken it out 100%. But I believe it's going to come back and break above this area here, okay? So when we were making lower lows and lower highs on the 24 range, if you look at that in comparison to the 120 range chart, the higher base chart, we're still bullish to the upside. So that's what I said at the beginning. If we're bullish on the higher base chart, then we're looking for, excuse me, I need to move this back up, guys. Looking for setups to go long using the higher base direction, and then just scaling down to your lower base chart to find setups or pullbacks to go along with, in reference to the movement of what's going on the higher base chart. So that's what I'm doing, pushing higher, pull back, couldn't find anything here. It pulled back, it pushed higher here, it came back, but we're still bullish on the higher base chart. Yeah, we broke some structure right here, but because we're still bullish on the higher base chart and tapping into a demand zone, I'm looking for some activity to take place here. It pushes up, break a little bit of structure right here, and then it just runs to the upside right there. This was rejection right here, and I have multiple confluence. I'm gonna take that trade. Breaking more structure to the upside, okay, as we reject off this low right here, out of a higher base 120 range demand zone, which that chart is still bullish, comes back. I'm still going to take the long entry to fill these gaps going back to the upside. Now, I believe we're going to run these tops right here is all I want to say, okay? So spend some time watching the video and understanding structure. There's a great video that I put together, market structure video that I put together for anyone that's interested in becoming an elite member. That's one of the things I also included in that perk or tier for the rewards. So basically what the elite membership program is a YouTube-based membership program for creators like myself. That's what you're doing, supporting me as a content creator. But I'm showing you, I'm giving you something in reference to the strategy and how I actually trade using range-based charts. But you can use the same thing. You can do the same thing trading whatever charts work for you. Because all we're doing is walking through understanding structure, okay? Following price action, marking up appropriate levels or zones surrounding supply and demand on our charts, and I'm walking you through the strategy and talking about structure I was looking at, setup after setup, in reference to supply or demand zones, depending on which way the market's swinging, where I'm placing my target profits, where I'm placing my stop losses, just giving you running you through my mindset of what it looks like through my eyes and looking at the actual charts, okay? So for anyone that's interested, the link is down in the description portion of the video, both the Discord and the Elite membership link if you're interested, okay? Not forcing anyone's hands, but I mean, if you really want to try to learn to trade and understand structure, I mean, it's all there, okay, guys? The market structure video, trade breakdown, slew of those videos that walk you through setup after setup after setup. So again, it's only $6.99 a month. I don't have a mentorship program where I'm charging hundreds or thousands of dollars. Same thing with the trading course. I'm not doing that. I'm just making something simple, short, easy, inexpensive for someone and what you're doing in return to support my efforts as a content creator by just providing you the tools of what I do each and every day. And if it doesn't work for you, it doesn't work, just move on, okay? Because then you only got a small little fee tied in to where you're not having to worry about, oh, I just spent $500 for this training program and it didn't work out. I'm not here to do that, guys. I just am here to share what I know. And you can watch the videos here on the channel. You may have to watch tons of them and spend a lot of time and hours and hours and hours weeding through the videos, but public on the channel and maybe understanding. But the meat to what I do is surrounding the trade breakdowns, which is part of the elite membership. So anyone interested, the link is down below. Outside of that, that's all I want to talk about today, which is kind of give you a freebie here today, a course on what it looks like through my eyes of looking at the markets and trading the same strategy. Very profitable if you know how to do it day in and day out. We've had successful people that have passed their evaluations, that are trading with their own live funds, that are part of the Discord community. Some have moved on, and I don't expect everyone to sit around forever, okay? So again, if you're interested, it's there. If you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button down below. Make sure to turn your post notifications on. That means clicking the bell, okay, to turn them on so you don't miss any of the uploads. Outside of that, if you found some value in the video content today, okay, and it has really interested you, maybe you become inspired and you really wanted to take this journey, go ahead and click that like button right now, that thumbs up button. Leave me a like on the channel. On the video, I should say channel, on the video here. It helps the video content get out to where it needs to go here on the YouTube community. And I want to see people, become inspired and become successful traders as well. But that's all I have today. Take care. I'll see you in the next one.